So for the errors which are not shown by the trial balance, how does it work? We have prepared the trial balance, and the trial balance balances whilst these errors are there. So these are errors that will not be detected by the trial balance. Which are these errors? So the errors not shown by the trial balance, the first one of those errors, we said there is the error of principle. The error of principle, this arises when an entry is recorded in the wrong class of accounts. The classes of accounts, the ORP, we have the purchases, we have the assets, we have the expenses. So if we have an asset, you have a record in an expense account. Assets have a debit balance, expenses have a debit balance. Trial balance will still balance, even though title an error. So the error of principle, it arises if you have recorded in the wrong class of accounts. Yes, sir. So for the error of principle, this arises if we have recorded in the wrong class of accounts. So for example, maybe let's add an example of an error of principle. Sold a motor vehicle and recorded this sorry, let's say bought a motor vehicle. Just remove sold and say bought a motor vehicle. And recorded this as expenses. So we bought motor vehicles, but we recorded this under expenses. So the money that we use to buy motor vehicles, it's not part of the expenses. Money that no badara, of course, for the business to operate their expenses. But if you buy a motor vehicle, it's not an expense. That cost is supposed to be recorded as an asset, not an expense. So in this case, it means we have recorded, because if we buy a motor vehicle, you have bought an asset. If you record that under expenses, you have recorded an asset under expenses. That is the error you've made. So recording an asset under expenses. Then we have the other error, number 2, error of commission. Error of commission, it means you have recorded in the wrong book of the same class. They are all assets, but in the wrong asset account. For example, you can say we are recording, let's say if you are recording, we buy a motor vehicle, but you record that in machinery account. They are all assets of the business. They are all fixed assets, but you've recorded in the wrong fixed asset account. So bought a motor vehicle, and recorded it under, so we bought a motor vehicle and recorded it under in the machinery account, and recorded it in the machinery account. So we bought a motor vehicle. The asset's name is a motor vehicle. It's an asset, but Tovadano recorder in which account? Tovadano recorder in, the asset is a motor vehicle. Then we record in machinery account. They are all assets, but it's the wrong asset account. That's the error of commission. We've recorded in the wrong account of the same class. Besides the error of commission, we have also an error of omission. They sound almost the same, but they're different. Error of omission. So we have commission and omission. error of omission. If it is an error of omission, to omit, it means you have not recorded. Error of omission, you have not recorded in any of the books. For it to be an error of omission, you must have not recorded in any of the books. So it's not like you've recorded in some of the books, but in others you did not. No. Error of omission, it must be from the onset. Nothing was recorded in the books. So if an amount was not recorded in the journal, it means automatically it was not recorded in any of the books, because what we transfer to the other books is what we have recorded in the journals or book of prime entry. So if an error involves us not recording a transaction at all or not recording it in the book of prime entry, that's error of omission. So let's save it down. This arises when a transaction was never recorded from the book of prime entry. Right from the book of prime entry, right from the first book, the amount was never recorded. That's error of omission. The amount was never recorded right from the book of first principles. So error of omission arises if an amount was never recorded right from the first book. So they can say that a payment of 2004 rent was omitted from the books. If it is omitted from the books, that's an error of omission. It's not recorded in the books. So an error of omission, this arises when the transaction was not recorded at all. There's an error of omission. Then besides the error of omission, so we have omission and we also have original entry. Error of original entry. This also takes place in the book of prime entry. So error of original entry. Omission, it means we have never recorded in any of the books. But original entry, we are saying, we recorded in the first book, but we made an error in the first book. Original entry means you made an error in the first book you recorded when you originally entered the transaction. So this is when an error has been made. Has been made in the journal or book of prime entry. When we make an error in the book where we initially record transactions, called the book of prime entry, that is said to be an error of original entry. So it's very difficult to pick an error in the book of prime entry. Let's maybe take it, or let's give it an example there. Let's say your name is Tadiwa, and your parents wanted to call you Tapiwa. So per birth entry, vakakanganisa, why don't the Tapiwa, sorry, Tadiwa, and they typed with Tapiwa. You realize that if that is not corrected, chitupa chako, license, my documents, ese, anenge akangorinezi tariare kuti Tapiwa, will not be able to pick it later, but no, munu yaida unzitadiwa. because all the records are in that error. So if an error is made in the first book or in the first record, it will be carried forward. You will not be able to detect it later. So that's an error of original entry, an error which has been made in the journal or the book of prime entry. So for example, we can say, the sales were recorded as 45 instead of 450 in the journal. So the moment they mention the journal is the book of prime entry. This is where we initially record a transaction. If an error is made in the first book of accounts, then it's not detectable. Then besides the error of original entry, we can also talk about compensating errors. Compensating errors. This is when two errors cancel each other. Compensating errors. This is when two errors cancel each other. When they compensate, it means there are two errors, but they've canceled each other. So it means when you're recording on the debit side, one will short is $10. Because the trial balance, if you go up, the debit and the credit are supposed to balance. Kana washotesa ukune 10, uko washotesa ne 10. Ino balance, but still, paitika ma compensating errors. So the error exists on both sides. On both sides with the same amount. So if they are compensating errors, the error is existing in both sides and it's the same amount. The error is existing in both sides and it's the same amount. Besides the compensating errors, we then also have the complete reversal entry. Complete reversal entry. So we have the complete reversal entry. So complete reversal entry, what does this mean? It means we have done completely the opposite. What you were supposed to have debited, you have credited. And what you are supposed to have credited, you have debited. So you have done vice versa. So this is when a debit entry, this is when a debit entry has been credited. Has been credited. And a credit entry has been debited. So that's a complete reversal entry. Complete reversal entry. I think I like this one. Let's look at this. It's not, it's a different term. So let's assume this side there is, if there was 10,000, which we are supposed to put on the debit, and 10,000 we are supposed to put on the credit. So if we do the opposite, it can still balance, but there will be an error. If we put receivables on the credit and general receivables on the credit and payables on the debit, let's say if the payables were also 10,000, that vice versa, it will still balance, but banning an error. So that is complete reversal entry, where debit entry has been credited and the credit entry has been debited. What do we have in common for all the errors we have mentioned? All the above errors, are not detectable by the trial balance. All the above errors are not detectable by the trial balance, meaning that the trial balance will still balance in light of these errors. Atoitika ma errors the trial balance will still balance. They are not detectable by the trial balance. So for the above errors, they are not detectable by the trial balance. Okay, so for these errors which we cannot detect using the trial balance, we cannot use the suspense to correct them as well. So they cannot be corrected using a suspense account. They cannot be corrected using a suspense account. They cannot be corrected using a suspense account. Now, let's move to the errors which are shown by the trial balance. Let's now move to the errors that if these are to occur, the trial balance will not balance. So you can call them errors shown. How are they shown by the trial balance? It shows them by failing to balance. Okay, let's move on. So the errors which are reviewed by the trial balance, which will cause the trial balance not to balance are, the first one, we have casting errors. We have casting errors. So for the casting errors, it means we have either recorded a higher amount or a lower amount than the one we are supposed to have recorded. So for the casting error, it can be called, we can use the term transposition, transferring the wrong amount. So we have transferred the wrong amount from one account to another. So this arises when a wrong amount has been posted from one account to the other. It results in either over or under recording a certain amount. It results in either over or under casting. It results in either over or under casting. So the amount we are going to report will either be higher or lower than the actual amount. So that's the first one. The second one, let's have a single entry. If it's a single entry, remember we are supposed to perform a double entry. For every transaction, there's supposed to be two accounts affected. So the double entry rule, for every transaction, there are two accounts affected. If it's a single entry, it means the double entry principle has not been applied. The amount was recorded in one book only. So single entry. This arises when the amount has been recorded in one book, in one accounting book. Or you can just say one book only. instead of applying the double entry principle. Instead of applying the double entry rules. So if it's single entry, we have not applied the double entry rule. That every transaction must have two accounts. So if it's single entry, we have not applied the double entry rule. We have not applied the double entry. Then besides that, so for single entry, it means we have not applied the double entry rule. Then we move on. We can also have one-sided error, or we can say posting to the wrong side. Posting to the wrong side. Or one-sided error. So we're saying when you're doing your double entry, of course you did the double entry, but you ended up posting on the wrong side of another account. So it was supposed to be posted on the debit, but you ended up posting on the credit of one of the accounts, not on both accounts. One of the accounts you ended up posting on the wrong side. So this arises when an amount is posted on the wrong side of one account. Is posted on the wrong side of one account. Posted on the wrong side of one account. Lastly, maybe we can put, or maybe there's an NB attached to this one. When you make this error of posting on the wrong side, an amount that you're supposed to have debited, if you credit it, you correct that by double the amount. Whenever you make an error of posting on the wrong side, you correct by double the amount. It's more like I was supposed to give you, and instead I took from you. It means when I'm giving you now, to correct the error, I should give you double. I give you what I took plus what I was originally supposed to give. So when you post on the wrong side, you do the correct thing, but with double the amount. So to correct posting on the wrong side, we post on the correct side, but double the amount. So we enter on the correct side, but putting double the amount. We post on the correct side, but putting double the amount. Post on the correct side, but putting double the amount. Then let's move on. D, we can put arithmetical errors. Just failing to add the totals of the trial balance. So you can make arithmetical errors of failing to add the totals of the trial balance. So this arises when we fail to add up the totals. This arises when we fail to add up the total to add the total ledger account balances in the trial balance. In the trial balance, that is for the debits or credits. So we failed to sum up the debit entries or the credit entries. It will give rise to arithmetical errors. We failed to sum up the debits or the credits. Gives rise to arithmetical errors. So these are the errors that are shown by the trial balance. The trial balance will not balance. In light of these errors, the trial balance will not balance. If these errors are to occur, the trial balance will not balance. So in light of these errors, the trial balance will not balance. Kana errors ayakaitika, the trial balance will fail to balance. Let's move. So the above errors that can be shown by the trial balance are corrected using a suspense account. The above errors are corrected using a suspense account. The above errors are corrected using a suspense account. Example. KD Limited prepared trial balance which failed to agree with the total debits exceeding by the way, exceeding is what? Exceeding the total debits exceeding credits by 2004. The following errors were discovered. The following errors were discovered. The first error discovered is sales day book was undercast. The sales day book was undercast by 1,500. The sales day book was undercast by 1,500. purchases were recorded as purchases were recorded as 450 instead of 4,500. The third error is motor expenses of 2,000 were recorded in motor vehicle account. Motor expenses were recorded in motor vehicle account. We can also be told that a payment for rent was correctly recorded in the bank but credited in the rent account. So a payment of rent, let's say for rent of, let's give the amount there, 800. We can also be given that discount allowed of 500 was debited to discount received account. Discount received account. Then the last error we can add purchases of 3,200 by cash were omitted from the journal. Required the first requirement, let's be able to state which error it is, identify the errors from 1 to 6. Then B, prepare the suspense account to correct the errors. Prepare the suspense account to correct the errors. So let's start with part A. Let's identify these errors. For the first one, sales day book was undercast by 1.5. Which one is this one? Which error is this? It's casting error. So that's casting error. Number 2. Number 2, purchases were recorded as 450 instead of 4.5. Again, that's casting or transposition. We have transported a wrong figure. Then number 3, motor expenses of 2,000 were recorded in motor vehicle account. Motor expenses in motor vehicle account. Motor expenses in motor vehicle account. So, yes, Tendai?
Error of principle.
Error of principle.
Error of principle.
Yes, that's error of principle. Then number 4, a payment for rent of 800 was correctly recorded in the bank, but credited to rent account. So if you pay for rent, you're supposed to debit in the rent account, but instead, this was credited in the rent account. And they are saying in the bank, it was properly recorded, but it was credited in the rent account. So from the list of the errors, which one is this?
Error of commission.
Come again?
Error of commission. Error
No,
of commission.
not really. What did you original entry, no. Complete reversal. I'm out. Yes, yes.
Commission.
Ah. So commission tachitoti were recorded in the wrong book. Apa isinyaya kurekoda in the wrong book. Inyaya kutandendisa ku wrong side. So that one do yatati isusu because it was payment for rent. Ku rent ndo kwanendeswa kuside kusiko. So that one is posting on the wrong side or one-sided error. So this one is one-sided error. That's one-sided error. Then we move on to number 5. Discount allowed of 500 was debited to discount received. It's discount allowed, but debited to discount received. So these are different classes of accounts. Discount allowed is an expense. Discount received is revenue. So this one is error of principle. It's different classes of accounts. Then the last one, number 6. Purchases of 3.2 by cash were omitted from the journal. If an amount has been omitted from the journal or the book of prime entry, now that's error of omission. It means we have never recorded this at all. Now let's move to part B. So for us to be able to come up with the suspense account, the first thing is to prepare the journal entries. So we need journal entries. So we need to come up with journal entries. The journal entries are the first step. You need to come up with the journal entries. So we need the journal entries. So we have a debit, we have a credit. So we need the journal entries. So for the journal entries, we need to recall the pairs. Remember when we talked about the pairs, we said that the first three, they have debit balances. That's purchases, expenses, assets. These have a debit balance. If you want to increase purchases, if you want to increase your expenses, if you want to increase your assets, you have to debit them. They have a debit balance. Then you have revenue, liability, and sales. These have a credit balance. To increase them, you have to credit them. So it's a debit balance. To increase them, you debit. It's a credit balance. To increase them, you credit. So we have those with a debit balance and we have those with a credit balance. Now, let's start with error number 1. We want to correct these errors. Sales day book is for credit sales. These are sales. It's used to record credit sales. Was undercast by 1.5. So if sales are undercast by 1.5, it means we've under-recorded the sales. To correct that, we should increase our sales. And if we want to increase our sales, sales is revenue. So to increase sales, you have to put them on the credit side because they are revenue. They increase on the credit side. So if you want to increase sales, you put them on the credit side. That's how much. So it was sales of 1.5. So the sales, if they were undercast, it means the sales were under-recorded, of which sales, they have a credit balance. Of which in journal entries, we must have 2 entries. We need a debit and a credit entry. If sales are occupying the credit side, then what do we put on the debit? If we look at 1 is a casting error. It's part of the errors that we said are corrected using a suspense. So for casting error, the other entry would be a suspense. You write suspense. That is the corresponding entry. So you start with your sales to reduce the sales. Sorry, to increase the sales. Then the corresponding entry would be your suspense. Let's try the next one again. Number 2. So for the second one, purchases were recorded as 450 instead of 4.5. It's just the same as saying the purchases were undercast. They were under-recorded, but by how much? If you were supposed to record 4.5 and you recorded 450, you have under-recorded purchases by how much? What's the difference? You're supposed to have recorded purchases of 4.5 and you just recorded 450. You have under-recorded by 4,050. So 4,050 are purchases, of which purchases have a debit balance per pairs bid. So it means to correct this, you have to debit the purchases to increase them by how much? By 40.50. We have to debit the purchases to increase them by 40.50. Then the corresponding entry for this one, again, it's suspense, because it's one of the errors shown by the suspense, by the trial balance. So that's number 2. So suspense is put on the other side. Tawenda number 3. Motor expenses of 2,000 were recorded in motor vehicle account. For this one, I affect a suspense account. It's error of principle. So to correct the error of principle, it means you are supposed to remove from the wrong account and enter in the correct account. Motor expenses, it means these were expenses. We're supposed to add them in the motor expense account and remove them from motor vehicle, which is an asset account. So how do you record them in motor expenses? If we go to our pairs, expenses have a debit balance. So you are supposed to record them in motor expenses. 2,000. And you remove them from motor vehicle. Motor vehicle is an asset. You know, it's a debit, it means reduce one credit. So if to reduce from motor vehicle. So you credit the motor vehicle account to reduce from the motor vehicle account. You credit the motor vehicle account so that we reduce from the motor vehicle. Let's move to number 4. For number 4, it's one-sided error and it's corrected by the suspense. What is number 4 saying? A payment of rent. We paid rent, 800. So the proper thing, if you pay rent, you are supposed to debit rent account and you credit the bank or cash to show that you have made a payment. So you're supposed to have debited rent and credited the bank to show that a payment has been made. But what happened? Instead, bank but rent account, instead of crediting rent, we debited rent. Instead of debiting in the rent, we credited. Because the proper thing to do is to debit in the rent account, you credit the bank. Whenever you make a payment, money goes out of the bank, you credit the bank. That's our double entry. But in this case, we credited the rent as well. So it means there were 2 credits here. In the bank, we credited. In the rent, we credited. So this error was made in the rent account. But the error involves us recording on the wrong side of the rent account. So it was supposed to have been debited, but instead it was credited. So if you're correcting such kind of an error, you enter on the correct side, but double the amount. So we're supposed to have debited the 800, but we credited. So you enter the 800 on the debit, the correct side, but double the amount. Then you credit your suspense. Then you credit your suspense. Let's move on. Let's move on, number 5. Number 5, discount allowed of 500 was debited to discount received. So it means this was supposed to be entered in discount allowed, but instead, some discount she received. Discount allowed in a debit balance. So we are supposed to enter, it was debited in the discount received. Take note, debited to discount received. So if Kanatikaendesa in the wrong account, what to do debit? How do you correct on the other side? Kana vakaita error to enter on the debit side, it means you simply credit to correct that error. And it account yavakaisa kusiri iko vakaisa ku debit in error, so it means you correct that by crediting in that account. So in discount received kwavaka debit in error, we credit. Then discount allowed do matachifana kurecord. So it means you debit discount allowed, which is the correct account. But they did not say good wrong side. Record them wrong account. So no enter in the correct account, that's the discount allowed account. Then we credit discount received to remove from discount received. To remove from discount received. To remove from discount received. Then we move on to number 6, the last one. Number 6, in a suspense. This is an error of omission. It was not recorded in the book. So if an amount was not recorded, how do we correct? We correct by simply recording, because it was not recorded, so we just do our double entry. Purchases of 3.2 by cash. It means we debit purchases. We debit the purchases. We debit the purchases of 3.2. We credit the cash. If you buy using cash, you debit the purchases, you credit the cash. Because cash is going out. So these are the journal entries to account for the errors above. So to account for the errors above, these are the journal entries. The question had said then, come up with the suspense account. Now let's have the suspense account. So let's have the suspense account. So for our suspense account, they have indicated which side. We can look at the question. They have said that the total debits exceeded credits by 2.4. So the smaller side is where we have the opening balance. So which side is smaller? They're saying the debits exceeded the credits by 2.4. It means the credit side had a shortfall of 2.4. So the credit side had a shortfall of 2.4. So that's the opening balance. So the balance BD of the suspense is the shortfall. If they say the smaller side was the credit side, the balance BD will be on the credit. If the smaller side is the debit balance of the trial balance, it means the balance BD will be on the debit. And then after that, we go back to our journal entries. Suspense. In this case, we have written suspense on the debit side. Suspense, but we've written good suspense on the debit side. If we've written good suspense on the debit side, we're going to debit side because suspense account, this amount 1.5. But zita raunonyora is zita the other entry to sales. Zviri kureva kuti apa tikuenda kudebit kwesuspense tononyora kuti sales. So we're going to debit kwesuspense, then you write sales 1.5. For anyora suspense could debit, it means we're going to debit side kwe suspense. Ononyora zita the other end. Toyao panext patanyora suspense. Tanyora suspense ku credit. Uchaenda ku credit kwe suspense, ononyora kuti purchases. So we're going to have credit to suspense. You write the name of the other entry purchases. You then go to the next one. In a suspense, it's the fourth one. You go to the credit side, you write the name of the other account, rent. Then you're done. That's the suspense account. So provided that if you're using a real question, it should balance. But this one, these were just imaginary figures. So the total debits and the total credits should be the same after correcting the suspense. Or they can say, what is the revised balance of the suspense account? So after doing this, the revised balance becomes this one, revised balance. They can say, what is the revised balance? So the smaller side is where we get the revised balance of the suspense. We have corrected the errors given, and now we have a new balance for the suspense account, which is 6550. So that's the suspense account. The suspense account is opened so that we can deal with errors shown by the trial balance. So that we can deal with the errors shown by the trial balance. When these errors are to occur, some of them will affect profit and some of them will not affect profit. They can say, what would be the revised profit figure? What would be the revised profit figure if before the errors, the profit was 8,000. Before the errors, the profit was 8,000. So we can say the profit before adjustments, then we take the 8,000. Then we go to our adjustments. We are now just using the journal entries. Whenever you credit sales, wawedzera masales. Ukawedzera masales, profit inowedzerawo. Anita. So unobva wauya panapa, wobva wanoti masales. Kuwedzera kwataita masales, profit inowedzerawo. So masales awedzera ne 1.5. So unonoedera that to profit. Kuadjustra kwataita masales, chimawedzera profit inowedzera. Toenda pa number 2. Number 2 affect a profit zvekare, ma-purchases. Handiti? Kuwedzera ma-purchases zvinotowedzera ma-cost saka kureduce profit. So increase in purchases zvinotoreduce profit yedu. Purchases kuwedzera kwaita zvinhu zvatatenga zvinoreduce our profit because it's increasing my cost of sales. Move on to item number 3. Item number 3 affect a profit because pane my expenses. My expenses awedzerwa pa item 3. Kuwedzera my expenses ako kureduce profit. Whenever you wedzera my expense, uri kureduce profit. So motor vehicle expenses. Wedzera my expenses, it's actually indirectly reducing your profit. Then besides that, to enter item number 4, rent has been increased as well. Increasing rent, debiting an expense, an expense. So increasing rent is also reducing your profit. rent. Increasing rent is reducing your profit. If you increase your expense, you reduce your profit. We have discount allowed and discount received. Discount allowed is an expense, discount received is income. This one is net effect of 0. We have added, because discount allowed is an expense, so it means we have added income of 500, we have subtracted an expense of 500. So the overall effect is 0. So that one, it will not affect the profit. We have added 500 on other incomes. We have also subtracted 500 on expenses. So you can leave that one. Let's have the purchases, the last item on purchases. So we have purchases. Debiting purchases, it means Tawezrama purchases headed by 3.2. So the revised profit figure, we have dealt with all the items that affect our profit. So in fact, the revised profit is a loss. So after those errors, we have a net loss of 1350. So maybe the errors were made deliberately so that they can overstate profit. Because after adjusting for these errors, we are now getting a loss. Okay, from there, let's move on to control accounts. So let's move to the control accounts. So the control accounts, these, we have actually looked at part and parcel of these when you're looking at accounting for receivables and payables. So the control accounts are used to uses of the control account. Why do we prepare these control accounts? So the first use of control accounts is to determine the closing balance of receivables and payables. So the control accounts, they are used to determine the final figure for receivables and for payables. Determine the closing figure for receivables and payables. Determine the closing figure for receivables and payables. Control accounts are also used to detect and prevent fraud. Detect and prevent fraud. If we are preparing control accounts, we can quickly detect fraud, which is helpful, or prevent fraud, because if there's not been reconciliation in the control accounts, we can quickly investigate on how to. So we have two types. We have the receivables and the payables ledger control. I'll just put the formats, but I'm not going to get into detail, or I can just copy them from above and list them and bring them down. receivables and payables control. So if the receivables and the payables control. So this is the same, this is the structure of the receivables control. So we have the receivables ledger and we have the receivables control. What is the difference? Ledger records for one person. It records for an individual account. But if it's the control, is now the total. So the receivables ledger control is still the same. So receivables ledger control. Let's check for the payables ledger control. So here is the payables ledger control. Payables ledger control. So the payables ledger control. So with the receivables ledger control and the payables ledger control. So the ledger records individual balances. But the control records the totals. The control records the totals. The receivables control, the control records the total. The ledger records the individual balance. What I want to focus on is not on recording in this T account, which I believe you now know, but I want us to focus on errors, amending the errors in the control and ledger. Amending the errors in the control and ledger. Amending the errors made in the control and ledger. Amending the errors made in the control and the ledger. So the first thing is to understand that transactions come from the journal. From the journal, the individual amounts are transferred to the ledger. Then the totals are transferred to, so the individual amounts to the ledger, then the totals to the control. Let's say we sell. Let's say this is the sales journal. So in the sales journal, we're going to record the individual transactions. We have made sales to James. We've made sales to Tanaka. We've made sales to Leroy. we've made cells to Anisha. So these are the cells we have made. We have sold for 400, 120, 350, 220. So these are individual balances. They are transferred to the ledger, but the total of these balances is transferred to the control. So the individual balances e.g. the 400 and the 120 are taken to the ledger, but the total that is 1090 is taken to the control. So if we add the total of what is in the journal, the 1090, inofanira kunge ichienderana nema-amounts ari kuledger, because the difference only is that kuledger kuenda ma-individual kuenda the total balance, but tikabatanidza zviri kuledger zvinofanira kunge zvakaenzana ne-the total yataendesa ku-control. But this is not always the case. Errors can happen, which makes these balances different. So if the balance in the ledger is different from the balance of the control account, the balance of the ledger is different from the balance of the control account. This indicates that an error has been made. This indicates that an error has been made. So the ledger and the control account, they should be reporting the same amount. If they report different amounts, it means an error has happened. Okay, types of errors and how they are corrected. Types of the errors and how they are corrected. Types of the errors that you're likely to find and how we are supposed to account for them. Number one, this is an error in the journal. We have actually made an error in the journal. It affects both the amount we are going to enter in the control and the ledger. So if the error is made in the journal, it affects both the ledger and the control. So an error in the journal, it affects both the ledger and the control. An error in the journal, it affects both the ledger and the control. Then we have number 2. An error in the journal affects both the ledger and the control. Then we can have an error. So what do I mean by the first one? Maybe before we go. That in the control, we take the total. Then ledger trend is an individual balance. If maybe we wanted to put 400 for James, but we made an error and we entered 40 in the journal, it means that because the amounts we take to the ledger, we take them from the journal. It means to the ledger, we're going to transfer a wrong amount. And also, the total we are going to transfer to the control will be wrong. Because all these books, they rely on what we have recorded in the journal. So if an error is made in the journal, it's going to affect the total that will transfer to the control and the individual balance transferred to the ledger. So an error, if it takes place in the journal, it affects both the control and the ledger. Then an error in the control account. If the question says that the error was made in the control account, an error in the control account affects the control only. An error in the control accounts affects the control only. If we make an error in the control account, it affects the control only. Then an error in the ledger affects the ledger only. So the error in the ledger, sometimes they will say the error was made in the list of balances. The list of balances. They can say the customer list. They can say the customer account. These are indicators that the error was made in the ledger. It's supposed to be to affect the ledger only. An error of a wrong total. An error of wrong total. They can say sales or purchases journal. If they tell you the sales journal or purchases journal was undercast, is the total. An error of the wrong total affects the control account only. Affects the control account only. If it's the wrong total, it affects the control account only. Okay, this area of errors and suspense, I wouldn't want us to rush through this one. So I want us to end on this part. Then I want you to revise the suspense and errors so that when we start now correcting these errors for the control, you won't end up maybe getting a lot of confusion there. So I've just introduced it. In the next session, we'll then correct the errors. So for today, allow me to end here. So go and work on what we have been discussing. Go and read and go and practice.